Estamos vigilando al propio Jerome Powell, pero vamos de la mano de Javi del Valle y de Alliancebernstein en este primer tramo y miramos también a esa Reserva Federal de San Luis. Javi, tú dirás.
Pues efectivamente, José, seguimos vigilando lo que diga Powell, tenemos a toda la reacción volcada en este discurso en la Cámara de Representantes, seguimos viendo todos los puntos clave que comenta, por ahora recalcando que puede ser que la pausa sea simplemente intermediaria, ¿no? Que puede ser intermitente, por así decirlo, porque en julio se volverían a subir los tipos de interés, ha recalcado Powell, y bueno, por ahora nada nuevo, le preguntan sobre la banca, hemos estado desglosando todo eso y veremos si da alguna pista más sobre qué esperar. Mientras tanto, tenemos con nosotros a Edward Bryan, Portfolio Manager, Sustainable Global Small Cap Portfolio at Alliancebernstein. How are you, Edward? And thank you for coming to Negocios Televisión.
Thanks for having me. Good afternoon.
So, starting to talk about markets and the economy, since we last spoke at the beginning of the year, we have seen a strong rally in the stock market and almost in risk assets. What's driven this, and do you think it's going to continue for the next half of the year?
Yes, I mean, that's right. And to be honest, it's a story that really started towards the end of last year that has continued into this year. I mean, of course, we've had some bumps along the way in the form of the banking sector turmoil and concerns around the US debt ceiling. But generally, we've seen markets rally hard on softening inflation data, particularly coming out of the US, and the collective hope of investors that we may be moving somewhere towards the end of what's been a very aggressive hiking cycle. So within this, we've really seen, I guess, a reversal of some of the trends that we saw last year, with many of the worst hit areas of the market from 2022 performing the best so far in 2023. So growth stocks would be a great example of this. I'd say the challenge that we have with the rally so far this year is that it's been particularly narrow, with a handful of primarily tech-focused stocks responsible for a disproportionate amount of the index gains. So do we see it continuing? I think that is definitely kind of the trillion-dollar question, but I would say our view in general is that we will see a broadening out of the recovery.
Very interesting, Edward. I will be translating a little bit what you are saying in Spanish also for our Spanish audience, as they know what you are answering. Básicamente nos dice Edward que por supuesto es la pregunta del trillón, ¿no? ¿Qué va a pasar con la economía? Y por supuesto que todo va a depender de la recuperación económica a partir de este punto. Vamos a preguntarle también sobre inflación y Banco Central, sobre todo con el discurso que está dando Powell ahora mismo. Edward, you mentioned inflation, central bank policies. We are seeing right now Powell testifying about rates and how is the economy going to slow down in the next year. What do you think, and what is your view at Alliancebernstein about the rates for the remainder of the year? Do you think Powell is still, as he say, going to raise rates again?
Well, I think, of course, last week, as we all know, after 10 consecutive hikes over the past 15 months, the Fed decided to keep interest rates on hold. And I would say while many market participants anticipated that this would be the case, I think the Fed definitely surprised some with their hawkish tone. I think, where do we sort of see things going from here in terms of rates? I think, barring any sort of significant deterioration in the data, specifically the employment data, we do expect to see another rate hike in July's meeting. I say beyond that, it's heavily dependent on what we see in the data. If we see the labour market kind of weaken from here, which is the base case of our economists, then July could well be the last hike. If we don't, and we see any kind of acceleration in the labour market, or indeed other sort of inflationary pressures, then we could revert back to hikes at each meeting. So I'd say perhaps appropriately, the market has now moved to price out any cuts for the remainder of this year, with the first cut not fully priced until about March of next year. So barring any sort of hard landing scenario, I would say that is fairly reasonable.
Edward. Nos dice Edward, en cuanto a la subida de tipos de interés de la Reserva Federal, hoy Powell recalcando en la Cámara de Representantes que tiene que seguir subiendo los tipos de interés, que esto es simplemente una pausa intermitente y que deben seguir continuando con las subidas de tipos, aunque sean en menor magnitud a medida que se acercan al final del camino. Le preguntamos a Alliancebernstein sobre qué opinan sobre esta subida, sobre estos comentarios de Powell, si realmente es un farol, como dice el mercado, o posiblemente veamos una subida o más subidas hasta esa tasa terminal que quieren del 5,6%. Nos responde Edward desde Alliancebernstein que ellos esperan otra subida más de tipos en julio debido a que todavía los datos, sobre todo del mercado laboral, no se están deteriorando excesivamente. Que una vez los datos empiecen a deteriorarse, ahí es cuando podríamos empezar a ver una pausa real de la Reserva Federal. Por lo que en julio parece ser que todo apunta a otra subida, pero si el mercado se debilita a partir de aquí, podría ser la última subida, nos dice Edward. And Edward, talking also about this, how are you positioning for the second half of the year? How are you positioning the portfolios?
I think in terms of, I would say, interest rate sensitive asset classes, across our multi-asset portfolios, we would generally express our view on duration through our exposure to government bonds, which typically, as you'll know, are kind of the most interest rate sensitive assets. I would say for most of last year, we were very much underweight duration, given our view that inflationary pressures would force central banks to hike interest rates, and that indeed is what we saw. More recently, we've become more positive on duration, and believe that it does have a role to play in multi-asset portfolios as we progress through the remainder of the year. Yields in government bonds remain attractive, and in our view, falling inflationary pressures and a global hiking cycle that looks fairly long in the tooth certainly reduces some of the downside risks from here. And then at the same time, the diversification properties with stocks have started to reassert themselves. I would say no more so was this evident than during the SVB driven market volatility that we saw in the first quarter. But as ever, I think being flexible with this type of exposure is very important. And even within government bond exposure, we're being very selective. We prefer the belly of the curve, and we prefer US and UK duration primarily over Japan, for instance.
Thank you very much, Edward. Dice que, bueno, que para exponerse desde Alliancebernstein esta segunda mitad del año, pues que sobre todo están poco a poco incrementando la duración de las carteras. Activos de mayor duración, que son los que se han visto perjudicados en el último año por esa sensibilidad a los tipos de interés, pues nos comenta Edward que poco a poco esa exposición la están incrementando en activos de mayor duración, que los bonos siguen siendo atractivos y sobre todo que hay que ser muy selectivos en esta segunda mitad de año, enfocándose, si se enfocan en estos activos de mayor duración, sobre todo prefieren los activos de Estados Unidos y de Reino Unido. And finally, Edward, I want to ask you about the emerging markets. What are your views for the emerging markets, and also how are the markets performing in that areas?
Sure. So I think after we saw what was a fairly encouraging start to the first quarter, after this, I would say for much of the remainder of the year so far, we've seen emerging markets lag their developed market counterparts. I think we've seen some early signs of this dynamic reversing in June, and we think that EM equities can present an attractive sort of opportunity for investors right now. So driving that view, we see the growth differential, so economic growth differential between emerging markets and developed markets. We see that widening over the next few years, which is typically a pretty good environment for emerging markets to outperform. Couple that with the fact that central banks, for the most part in emerging markets, are done with their hiking cycles, and even in some markets, we're now seeing rate cuts priced in. We also see some tailwinds for EM from China's post-COVID-19 reopening, even though perhaps that may not be as strong as we initially expected. And then alongside these quite kind of strong fundamental drivers. The valuations across both the equity market and the debt market look pretty attractive when you compare them with their developed market counterparts.
Very interesting. Edward Bryan, portfolio manager at Sustainable Global Small Cap Portfolio at Alliancebernstein. Thank you very much for your time and for being with us at Negocios Televisión.
Thanks for having me.